Hello, everybody. It's Jeff Gibby over at Metastock. I hope you're doing well. I hope you're having a good day today. Um, it's a little overcast and rainy here in Utah, but if you don't like the weather in Utah, you just have to wait a few minutes. I hope you're doing well. We have a good guest today. I want to thank you for coming into the webinar room. And let's go ahead and read a legal disclaimer for you. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. And Metastock shall have no liability for any investment decisions based on the use of the software. Any trading strategies or any information provided in connection with the company. So today we have a very special guest, Brent. Barry's been trading, I think, and I could be wrong on this, but I think he's been trading since he was in diapers. He'll correct me, of course, if I'm wrong. I know he, and I'm sure that's being a little bit hyperbolic, but he actually learned to trade from his dad. He spent a lot of money on trading education. He's gone through a lot of books, and he's been doing it for a number of years. So he's got some methodologies that I particularly like quite a bit, and I'm going to let him talk about it. So let's go ahead and bring you in, Barry. I'm trying to unmute you. Hey, Barry, how you doing today?
I'm doing great there, Jeff. How are you, my friend?
Good. So were you in diapers when you placed your first trade?
I was muted, but I was laughing when you said that because I was 8 years old when my dad started teaching me trading, and I am very, very proud of the fact that I was out of diapers before I was 8. So yeah, that was one of my major life accomplishments. Yeah, I was out of diapers at 7.5, so that was really a significant accomplishment for me that I'm still trying to rival that with another personal accomplishment.
Good
But
job. Good job. We do have, I'm going to ask the audience for a favor. If you can hear us, okay, I have somebody that's complaining in chat that they can't hear us. So if you can hear us, please let us know just by typing in the chat. I think it's limited to one person. Okay, thank you, Casey. Thanks, Bob. Jerry, good to see you. Thanks for coming. Okay, all right, we can hear. Okay, I will type some instructions to Norm in terms of things that he can do. Barry, I'm going to get out of your way.
oh, Jeff, you could never be in my way. That would be impossible. But anyway, thank you for turning over the controls. And yeah, I just want to really thank you sincerely for inviting me on to the presentation today. Jeff and I go back quite a few years, and I really go back with Metastock. Metastock was the very first charting platform that I was ever introduced to back in the days of yore. Well, like I said, and as Jeff said, I started trading when I was, well, 8 years old, knee high to a grasshopper because my dad was a stock trader and he was passionate about it. And I got that passion from him. It was contagious. So it's something that bonded us all of our lives. And anyway, when I first started with charting, we'd look at the charts in the Wall Street Journal from yesterday. And then when I started a formal education under another professional traders, I got older, and actually it was legal for me to trade my own stuff. My dad would trade, and I would just, he would educate me as he was doing his trades. But yeah, then later on, got a mentor, and he actually had us drawing charts by hand. Can you imagine that? I mean, literally, he would hand us a piece of graph paper, and then he would have an overhead projector with a transparency. Remember those? Well, some of you do, some of you don't. Some of you don't even know what a rotary telephone is. But anyway, when I was born, we had black and white TV. So that's how ancient I am. But no, we had to hand draw each bar, the open, the high, the low, the close. There was one bar. Then go to the next one, hand draw it. I literally did that. And as tedious and as annoying as that was, I got to tell you, it actually was very helpful. I think that exercise helped me get a feel for the market that you don't get with, being born in today's technology world. But hey, that being said, I don't teach anybody to hand draw charts, and I wouldn't really wish it upon anybody. So now we've got really, really great technology, and Metastock's at the top of the list. I started with Metastock. I'm still with Metastock after all these years, and Metastock has made so many evolutions and revolutions, and still at the cutting edge, no, bleeding edge of technology. And we'll show you some of that here in a minute and what they've been able to do specifically with the top dog trading methodology that we have not been able to do with any other charting software. No other charting software can do it. And so that's why I'm very proud to be here and thankful for the people at Metastock and their brilliant programmers, seriously, who were able to do what no one else could do. So we'll show you some of that today, but let's get into the educational part of it. We're going to talk about timing your entries and exits. I'm going to show you a very specific indicator that I use for that. I'll show you how to set it up on your charts, give you the exact details, the exact parameters, and I'm going to also show you the patterns to trade on it. So we're going to get into some details here. I encourage you to have a pen and paper in front of you. It's not going to just be general stuff. We'll have some general stuff, but it's also going to be detailed. Well, you know what? Jeff already gave a great introduction for me, but this is just part of the slide. So there's my ugly mug, and I really need a new picture. That's pretty fuzzy. I'm also the author of Trend Trading for Dummies. Very proud to say that I've received numerous Reader's Choice Awards from Stocks and Commodities magazine over the years. Again, this last year, and really proud of that. And by the way, so is Metastock. And I've contributed to other authors' books and worked with all these various major companies who obviously have vetted me before they've allowed me to train their traders. And my list goes on about 30 times that long. Jeff already did this disclaimer, and that's very important, but since that's already done, we can skip through that and save ourselves some time. Since I'm here with you live, what I'd really like to do is to help to solve your problems. So let's talk about this. Let's get you guys involved a little bit. And I can customize the presentation. Obviously, I have a preset PowerPoint presentation here, but I can customize it to your needs and help to solve your trading problems in the next 40 minutes or 50 minutes. So, and I can do that by spending more or less time on various topics. So let's meet your needs. Let's make this individualized here today. If you would, go ahead in the question box there, just type your answer to this question. What are your most common trading problems? Struggles, frustrations, etc. Type them in. I'll read them out loud here. So, because I don't know if you guys can see the question box and see each other's answers, so I'll read them out. In fact, I don't think you can. I don't think GoToWebinar shows that to everybody. Oh, wow, we just like doubled our audience since the last time I looked. That's great. Welcome, everybody. Welcome all the new people who just came in here. So, yeah, what kind of problems do you have that you would like me to solve for you today, or at least give you some tips or head you in the right direction? If I can solve them, I will. And, you know, but even if you just get a good lead on direction to solve your problems, then that's going to make both of us happy. So Hans, hi Hans, he says, getting stopped out. Yeah, that's a problem. Okay, well, you know what? You're actually exactly in the right place, because timing your entries, which is our main topic today, that's exactly what it's about. It's about timing your entry so you don't get in too early or too late to avoid getting stopped out. So awesome. David, finding stocks to trade. Oh, again, you are in the right place. Toward the end of the presentation, we're going to show you exactly how to scan for stocks to trade. So yes, good job. We will definitely cover that. Casey, getting out. Yeah, that's a very important one. Letting your winners run, not getting out too early or too late. Bradley, entries and exits. Yeah, well, that's pretty much all of trading, isn't it? When to get in, when to get out. All right, and everything in between. Saint Wu. Ooh, I like that. Saint Wu. Did you do 2 miracles that the Pope has approved of? I don't know. It just says ST, so I'm assuming that you're a saint. But anyway, lack of certainty. You know what? In all seriousness, that is really a good comment. In trading, it is very important to have confidence. You have to have confidence in your trading methodology. That is a huge part of the psychology of trading. And again, I'm going to show you how I do that. So let me keep that in mind. I want to address that directly. Jonathan, identifying the correct setup, not getting in out too early or out too late, right? Good. Okay, a lot of these are repeats. I'm not going to read every single one. Oh, here's a good one though. New one. Lanu says wrong entry, trading against the trend, and money management. Oh, Lanu, I got to give you a real tip of the hat because money management is not something most people mention, and it's critically important. All professional traders put a huge emphasis on money management, but rarely do I see webinar attendees mention that. So good for you. Good for you that you're aware of that. Again, let me see here. I'm just going to look for some new ones here. Alrighty. Okay, okay, good. That's pretty much going to cover it. So excellent. So the rest are all pretty much the same. Now, here's what I want to do to encourage you. I want to bolster your hope today that if you're not already making money, you can. And here's why. The problems that we all have, we can sometimes think that we're the only ones and that we are uniquely bad traders, but you're not. So, for example, with this question, I actually did a survey that I sent out to tens of thousands of traders, literally tens of thousands of traders. In fact, I redo the survey once a year. Here are the most common answers that they gave. Number one, they would say, I enter the market, then I get stopped out. Then the market goes back in the original direction of my trade. Now, I followed up with some people on that, and let me show you what they meant by that, because I asked them, what exactly do you mean by that? So let me know if this happens to you. What they said was that they'll be seeing an uptrend like this, all right, uptrend, looking good, and then they'll say, okay, I'll buy that higher low. So they buy, the market goes up a smidge, and they'll put their stop maybe here, and then the market goes back down, stops them out. And I'm like, oh, dang. But then, just to make matters even more frustrating, then the market goes back up in the original direction of their trade. So one of my mentors, actually my primary coach at the Chicago Mercantile Exchange, when I was getting coached there, he said, Barry, retailers, and by that he meant amateurs, retailers are often right, but at the wrong time. And that's what we're going to talk about today. This is one of the biggest problems people have. See, a chart is a two-dimensional object, right? Here's price, and there's time. And so if you bought here, you were right on direction. Market did go up, but you were wrong on time. You got into early. So how do we know to wait until then? All right, that's what I'm going to show you today. I'm going to give you a tool for doing that, an actual tool for doing that. So you'll now have that tool when we finish here today. If you stay till the end, you're going to see how to set that up. Second one was getting out of big moves too soon, so not making huge profits, right? We all know the adage, cut your losses small, let your winners run. And a lot of people said, I have trouble letting my winners run. So a lot of you mentioned that. Getting stopped out too often. A ton of you mentioned that one. Not knowing the best place to exit the market. Many of you mentioned that one. Trading a trend that doesn't follow through. A lot of you mentioned something about trend. So here's the takeaway I want you to get from this. You are not alone. There's nothing wrong with you. Don't think you're a uniquely bad trader and you don't stand a chance. We all, and I'm including myself in this, we all go through these same challenges. We all make these same mistakes. We all kind of had our unique mistakes that are a little more than others. That varies from person to person. But these common mistakes, man, I've struggled with these myself. And the good news is there's light on the other side of the tunnel because there are answers to every single one of these. And every professional trader, including myself, has overcome these problems. So that's hope. That's hope. There's nothing wrong with you. These are not unique problems to you. This is stuff everybody goes through. All right. So hang in there with us and we will show you how to solve these problems. So the big answer, start with the big picture, and then we're going to drill down and get more detailed in the next 45 minutes. The big answer is that successful trading is about creating a methodology. And when I use this term methodology, what I mean is that trading is not about any one thing. A lot of new traders come in and, Gosh, I remember when I first started using technical analysis and I thought, it looks so easy, right? It looks so easy. All these historical charts, and it's like they point out, oh, you enter here and get out there. And it's like, oh, yeah. Then I want to trade it in the real market. Yeah, no bueno, not so easy. So that was a real wake up call. And I think we've all, again, experienced that enlightenment, right? That's a common experience. And I started pursuing, what we call holy grails or shiny objects, looking for the magic indicator. And again, I still see a lot of people doing that. Again, I get it. I've been there, done that too, but that's not the answer. Indicators can be helpful, but indicators do what they promise. They what? They indicate. The answer is in the question. They indicate. They don't tell, and they certainly do not by themselves make money. If they did, we wouldn't call them indicators. We'd call them, well, money makers. So what does make money? The secret, not really the secret because it's not a secret, but the thing that makes you money, that'll turn you into a profitable trader, is having a successful methodology. Now, methodology is made up of numerous components. So it's no one thing. It's almost like a business has a business plan. And that business plan has all these different components that you put together. So same with this. Now, my methodology is all around measuring what I call the energies in the market. And by the word energies, I mean the energy of money. Money flowing in, money flowing out. Buying and selling imbalances. That's what we're looking for, because that's all that really matters. You can, have you ever noticed that sometimes the market goes up on bad news or it goes down on good news? Right, because the market doesn't always make sense. What matters is it's an auction place, and all that matters is how people feel and react to that news and the buying and the selling pressure. That's what is, and that's what makes the markets move, the imbalance of supply and demand, and we're looking for a dramatic imbalance and then just trade in that direction. We don't want to swim upstream. We just want to find where professional money is, the big money, that, I hate to say easy money because trading is never easy. But if you follow the whales, I call this philosophy, what do I call this philosophy? I just came up with a new little analogy for it. Trading with the whales. Yeah, that's it. So the analogy is I put my money in my little red wagon, I tie a rope to the handle, and I tie the other end of the rope to the tail of the whales. Now, the whales are the big institutions, the big money, the smart money. And I just let them carry my money in the right direction with strength, and that's it. So there are 5 energies in my methodology. So let me go through the list here real quick. Step 1, and by the way, this is very important because my methodology only has 5 variables. And that's important to only have 5. Why? To keep it simple. Another big problem a lot of traders have, in fact, this I think came up as number 6 on the survey, was mental overwhelm or mental overload. So those 2 words were both used. I consider them pretty much synonymous. So you've got to defend yourself against that because you've got to defend your mind in trading. You've got to defend your psychology. And so there's 2 things we're going to do with that. Number 1, we're going to keep our method simple and only look at 5 things. Now, are there other things you could look at? Absolutely. There's an endless number of things we can look at, right? Too many things. That's the problem. Now, here's the second distinction, though. Are there other good things we could look at? The answer is yes. The answer is yes. But the problem is we can't handle all that information and be an effective trader and make quick decisions and make confident. A lot of you mentioned confidence. So part of the answer to being confident is to say, okay, here's the game I'm going to play. I'm going to pick a niche in the market. I'm going to just play this area. I'm going to just trade this probability scenario. And that's it. And everybody else can do all their other stuff. There's many ways to groom a cat. And that's fine, and they're valid. But this one's going to be mine. And this is the one I like. This is the one I feel comfortable with. This is the one that resonates with my brain cells. And I can do this consistently and profitably, but I cannot allow the market to give me information overload. So I'm intentionally isolating myself away from all the other stuff and only look at 5 things. Now, the second thing that's going to help me with my confidence and my clarity and those things that you mentioned is I'm going to trade this methodically, meaning in a particular order. So I'm not just going to look at 5 things, but I'm also going to look at them sequentially. So my mind now is working in a very orderly manner. There's no guesswork. I'm not confused. I'm not flustered. My mind isn't all over the place looking at all these different things. Nope, 5 things and always in this order. Consider it like a 5-step checklist. So here it is. Number 1, trend. First thing I always look at. Makes sense to look at this first because we want to know, well, which side of the market do I want to be in? That's a good first thing. Number 2 is momentum. Now, momentum is the strength of the trend. Now, I wrote the book, Trend Trading on Dummies, so I know trend's very important. But even in that book, I say trend by itself is not helpful. So, in fact, none of these in isolation are helpful. So trend is you only want to trade in the direction of trend when there's 2 qualifications. Number 1, you're early in a new trend. Reason, the trend is your friend until the end. We've probably all heard that. What's the takeaway? The takeaway of that little slogan is not just trade in the direction of the trend. That's a half-truth. So it's true, but the other half of the truth is if it keeps going and the trend is your friend until the end, that means at the end it's your enemy. If you're still taking trend trades and an extended trend, you are not trading a probability scenario. So therefore, we're only going to trade in the direction of the trend early in a new trend. And I define that as the first 2 cycle lows in a new uptrend or the first 2 cycle highs in a new downtrend. And I'll show you what I mean by that when we bring up some charts. That's number 1 with trend. Number 2 with trend is it a strong trend or a weak trend? If it's a weak trend, it will fail. You will get stopped out. If it's a strong trend, then the odds it will continue in the direction of the trend after you get in. Now, what makes for a strong trend? Well, when I was in Chicago, well, let me ask you this. Let's see if we have any mathematical geniuses here. Somebody type into the question box, and the first one who gets the right answer, I will put you in my will. You'll get an invisible Cupid doll the day after I die, mailed to you from Ireland. I don't know. Anyway, it's just a joke, but who knows the mathematical formula for momentum? Somebody type that in. The first one who gets it gets my undying respect. Okay, very good. Knife is the first one. Cheaton is close second. Bill, good. Saint Lou, who's done 2 miracles. Who's done 2 miracles. That's your 3rd miracle now. You can tell the Pope. Wow, that's awesome. Yes, velocity times mass, or mass times velocity. That's exactly right. So think of that in trading, okay? Well, actually think of it this way, just to bring it to something we already know. So trend is like you walking north. If you're walking north, that's your trend. That's your direction. But trend has 0 leading components. So you could turn around and walk south within the length of 1 human footstep, right? Or you wouldn't even have to put your foot down, just pick it up and then swivel and turn around. So trend by itself has 0 leading properties. That's why it has a limited application in trading. It's always a lagging indicator. Momentum, on the other hand, velocity times mass, that's a potential leading indicator. So that is more like a bullet train going 150 miles an hour, there's your velocity, times mass with 30 heavy cars behind it. Now, if that bullet train is going 150 miles an hour with 30 cars behind it, and you apply the brake, is that train going to stop and turn around within the length of 1 human footstep? No, not unless something really bad happens, right? Disastrous. That's the leading physics, the leading property of the physics of momentum. Now, in the market, let's bring it over to the market. When I was in Chicago, what we would see is how we would actually physically see momentum, not just on a chart, but I mean on the exchange floor, what it looks like, because charts are just a map of what's really going on in the exchanges, right? It's a representation. So when you see it directly, it's very cool. So momentum would be velocity. Lots of people, I mean, literally running into the pits and placing orders really fast. So the orders would be coming in fast. All these orders flying in. Everyone's trying to get the order in before everybody else, yelling, screaming. Maybe you've seen, some of this on videos or YouTube or something. And then mass equates to volume, the weight of those orders. And not just how many orders, how many shares, lots, or contracts, but there's another distinction there, professional distinction. Okay, I'm sharing with you several professional distinctions here. The most important aspect of volume is not the histogram at the bottom of your chart. That is useful, but there's a more useful aspect of volume, and that would be block orders. Block orders. So that means the size of each order. If you're trading, stocks, is it a 50 share order, or is it a 1,000 share order, or is it a 10,000 share order? That's a big difference. That's a huge difference. In Chicago, we're trading futures there, obviously, and you got Goldman Sachs, Citibank, Merrill Lynch. They're putting in big orders, right? 100 contracts at a time, or usually about 100 contracts, 200, 300 sometimes. They could do that. Nobody can do that unless they have a huge trading account. Plus, I think you even have to get permission to do that. So, dang, that's the big money. That's the smart money. So that is the mass equation. All right. So just to make it very literal. So we've got a trend. We're early in a new trend. It's strong. Then step 3, remember it's a checklist in this order. Check off 1, early in a new trend. Okay. Check off 2. If there's no momentum, we don't take the trade. We step away from the mouse. If there is a momentum, then we go to step 3. Now I'm interested in the trade. Now it's a question of when to enter. Now I use my cycle indicator, which will show, it's nothing to download or import. I'll show you how to set it up in just a moment. So now it's about getting in at the exact right time, not too early, not too late. And then number 4, want to buy off support, short off resistance. These are all on the same time frame, whether you're day trading or swing trading, it doesn't matter. It all applies. If these are all bullish, as an example, then I got one more step. I go to what I call my fractal energy, which really is just a fancy word for the higher time frame. So if these are on the daily chart, then I look at a weekly chart, and I want to make sure we're trading in the direction of not trend, but of momentum of the higher time frame. Ooh, there's another little distinction for you. Most people say trade in the direction of trend of the higher time frame. Let me ask you a question though. Since we've already determined trend is a lagging indicator and a weekly chart is 5 times slower, why on God's green earth would you want to confirm your trade, I should say, with a lagging indicator on an already 5 times slower chart? Does it make sense that that signal is going to be way late? So instead we use the potential leading indicator of momentum. So I've got bullish strength on the long term. I got bullish strength on the short term. That's what I want, right? I want to trade markets that are going to move, that are going to really haul patootie. We don't swear here at Top Dog Trading. So, we want our P&L to go up fast, not slow. And that's one way to do it. Get momentum on your side on multiple time frames. Now we got a 5 out of 5 trade. You can actually consider this a scorecard. 1, 2, 3, 4, 5, done. That's it. That's all I need. Literally, that's all I need. The only other thing I look at is news, right? News, got to look at news. But other than that, for technical analysis, that's it. And always in that order. So now I can trade confidently and clearly and calmly and stress-free. It's very objective. Now, what makes this work is that in trading, we're always determining probability scenarios. So I'm asking myself, at any given entry point, how many of those energies align? Like I say, I give it a score of 1 to 5. The higher the score, the higher the probability. So it's like taking each trade to court. But here's the operative word, independent. What makes this a probability scenario is I'm taking 5 uncorrelated variables, or 5 independent witnesses to establish a preponderance of the evidence. So it's not as simple, and again, another little distinction here that I've run into as I've gotten feedback from people, that they think, oh, it's about just putting any 5 indicators on a chart, and if they're all bullish, you go long, if they're all bearish, you go short. Not quite that simple. It's more strategic than that. You have to choose 5 energies that are uncorrelated to each other. In other words, you could put 5 trend indicators on the chart. Okay, yeah, you got 5 indicators that are bullish, but you're really only measuring one energy, direction. I mean, dang, that'd be like putting 5 speedometers on the dashboard of your car, right? Just doesn't make any sense. So that is the strategy that gives you a probability scenario, 5 uncorrelated variables that align. Okay, let's look at some charts. Now that you get the concepts, the ideas, the logic, let's see how this looks in real life. Alrighty, so here's an example of Starbucks. We'll use all kinds of different examples here today. We got 30 minutes left, and actually I'll probably take about another 15 or 20, and then I want Jeff to present some stuff to show you the software that is just so incredibly powerful. So here's our short-term chart, 10-minute. Here's our longer-term chart, 30-minute. And again, Starbucks, but don't worry about the market. Don't worry about the time interval. You could do this with 1-minute and 3-minute charts. You could do it with 60-minute charts, daily charts, tick charts, whatever. Okay, these are really not consequential. So the 5 energies. So number 1, this red line, that's my 50-period simple moving average. That's what we use as a line in the sand between a bull and bear market. Not only do we need the market above it, but we need really the angle, the slope of it angling up. And that's it. So that's my trend indicator. By the way, I don't really use any proprietary indicators, although Metastock does some really cool stuff in plotting them. But yeah, simple, 50 MA. Okay, cool. It's probably the most common. That and the 200 moving average are probably the most common moving averages, and we use them both. Okay, so that's number 1. Now, we're starting a new trend. Why? Because we've got a wave count. Wave 1, 2. This is your first cycle low in a new uptrend. So this fulfills that, that slogan we all know that we talked about, is that the trend is your friend until the end, meaning only trade early in a new trend. This is how we do it. We look for first cycle lows in a new uptrend. And we do that through the use of wave counts. Now, I do have to say here real quickly, these are not Elliott waves. And I've got nothing against Elliott waves, but I personally don't use them. So for lack of a better term, we can call these Berry waves. But, I can't really, there's no intellectual property on this because it's pretty much just higher highs and higher lows. Okay. But the good thing about these is that the numbers stay. The numbers stay, and you can get more than 5 waves. And I like that because, hey, some trends are longer than others. So why should we just limit each to 5? So if a wave's going to be, or a trend's going to be longer, I'll count it 7 waves, 9 waves. But guess what? That also gives me a reference point as to, are we in an extended trend when the trend is no longer our friend? Why? Because then if it's no longer our friend, it's our enemy, then I'm going to look for reversal trades. So I look for reversal trades at wave 7 and 9 because 5 is the average trend statistically. All right, now, so anyway, early in a new trend, easily identify, look for your wave 2. Bada bing, bada boom, done. Oh, here's our momentum indicator. It's angling up, awesome. So we got strength coming back into the market. We've got a cycle low. Now, this is also the pattern. We need this pattern. It's called a little mini divergence. I'll go into that in a little more detail. You got support, 50 MA, there's your support level. And energy number 5, we go to the next higher time frame. In momentum, the red line, by the way, is momentum, and that's angling up. So we have a score of 5. 1, 2, 3, 4, 5. Bada bing, bada boom, we're in. And we made some money, honey. It goes all the way to wave 5. Awesome. So that's really it. I mean, that's how simple it is. I just do this all day long. Did it today, made some money. I mean, it's just, I love simplicity. So now let's talk about this cycle thing. Let's just focus on energy number 3 here as we finish up. So here's how we do it in Metastock. We're just going, like I said, you don't have to download any special indicator here. You just go into Metastock, or you can do this on other charting platforms as too, if you want to use others, but stochastic oscillator. You just pull that up, and you have to change the parameters though, because the stochastic oscillator is not mathematically designed to be a cycle or timing indicator. If you look at the equation, it actually measures momentum. But we're going to use that to our advantage. We're going to actually use the momentum aspect of this indicator to help us time our entries with amazing precision. But we got to change it. So here's how we turn it into a cycle indicator. So K, time period 5. On most charting platforms, that's defaulted to 14, by the way. So if you see a row for 14, change that to 5. Slowing, that's a moving average of K, that's your K. So 2-period moving average of K. And then D, we're going to change that to 3. That's going to be a 3-period moving average of the smooth K. Moving average type is simple, and you can customize this however you want. Okay, so you might want to write that down or take a screen capture of that if you want. Those are the new parameters to turn the stochastic indicator into a cycle indicator. A quick note on this, you do not want to use any of the derivatives or extra fancy schmancy stochastic oscillator. Like there's what's some of them? Stochastic RSI, double stochastic, SMI, stochastic momentum index, fast stochastic. No. So you either want to use what's just called the stochastic oscillator. If you have one that's called stochastic full, use that one. If you don't have full, then use stochastic slow. All right, so just the traditional one created by our good friend George Lane. Okay, so now that you got that, then we're going to put in some horizontal lines on it at 20, 50, and 80. These are going to be reference points that we're going to use. 20, 50, and 80. So these are heterodox numbers. So I like to put some big words in there to show off my amazing vocabulary once in a while, since my normal vocabulary isn't really that amazing. So I've learned like 3 really cool words. All right, so now, like I said, using this indicator is great, but by itself, it's meaningless. So we have to use it with the other energies. We're only going to trade cycles in the direction of the trend early in a new trend. We're only going to trade them that have momentum. We're only going to trade it when the fractal energy is aligned. And we're only going to trade what I call second chance indicator patterns. So again, take note of this. I don't want to take a screen capture if you can there. I think GoToWebinar actually has a screen capture little button at the top. Not sure, don't remember, but I think they do. So this is very important. Again, this one thing by itself only measures timing. You've got to use it with these other energies in the context, all right? Put together these not uncorrelated variables. So we're going to use second chance patterns, as I mentioned, to indicate a momentum shirt. Or if you wanted to actually use correct English, you might say momentum shift. So I guess I'll have to correct that slide. Okay, so I'm going to show you the mini divergence. There's actually 6 second chance patterns, but today I'll show you the mini divergence. So here's what it looks like. Let's bring up some more charts. First of all, here's what we want to avoid, okay, as I talked about solutions. Here's the problem, and then I'm going to give you the solution. The problem that a lot of people have is they'll see a downtrend, 50 MA going down, 50 SMA, by the way. Price comes down, holds, that's the 15 EMA, this black line. And it looks like you got a cycle high. And actually you do. Then it goes down, retests this low, and then it takes out this high, and it's like, dang, I got stopped out. Okay, no bueno, we don't like that. Then it goes down and makes lower lows. Okay, so how do we help avoid that monkey business? So what we do is we look for these momentum shift or second chance pattern signals, and here's what they look like. Again, we'll just focus on, I'll just call it mini divergence because I think that's the term that most people resonate with. So here we got an uptrend, 50 MA is angling up, got maybe a little lower low or equal low on price, but look at K. K is my blue line on the indicator here. K is making a higher low. Remember, the stochastic indicator measures momentum. That's the mathematical equation, measures momentum. But we reduced the period of K from 14 down to 5. So it's really just measuring a momentum shift within 5 bars. That's why we changed it to 5. I'm just looking for momentum shifts within a single swing low, not between swing lows. That's what most divergences are when you learn in books and courses and stuff about divergences. They're usually teaching you between cycle highs and cycle lows, or between swing highs and swing lows. What we're doing here is we're looking for just within 5 bars within a single swing low to find out when is going to be that final low where momentum strengths come down and this goes back up, now comes back down on weakness. It's hard to tell but by looking just at the price bars though, isn't it? This formula, this kind of pulls it out and makes it obvious for you. And I think most people can read that. Higher low, while price still making an equal low, or actually technically it's a little lower low. So that's when we could say, oh, cool. So now we get another retest of the slow bet on weakness. And so the momentum shift causes the market to go up. Okay, here's another example. So I talked briefly about trend reversals late in a trend, wave 7 and 9 in a trend. I'm going to look to trade in the opposite direction of the trend. Well, again, trend reversal trades are real tricky because it's hard to determine when a trend actually will end, because we do get trends that'll go really long. So how do we increase our opportunity to catch the right timing? Again, here's our mini divergence pattern. Goes down, actually does make a lower low, a little bit of a lower low, but on K, higher low. So goes down on strength, comes back up, goes down on weakness. Momentum shifts within that single swing low there, and that is indicated by this pattern. And then we can say, cool, okay, now this trend, the momentum has shifted. And by the way, trend reversal trades, these are literally the single best reward to risk ratio trade in the entire trading world. Because when they work out, the risk is the same as any other trade, but the reward is better than any other trade because you're getting in before the new trend is even confirmed. So these puppies are beautiful if you love good risk reward trades. Not only can you use them with trends, not only can you use them counter trend, you can even use them coming out of consolidation patterns. So one of the indications of a consolidation pattern is when the 50 MA is just going sideways and price is just kind of wiggling around in a narrow range. But look what happens here. Higher high on price, lower high on K. Now see, that's why I call this a mini divergence. We get K up and then angling down, and then boom, the slope dramatically drops while price is still making a higher high. This is why I say that K is a potential leading indicator. When you get these patterns, it's not always a leading indicator, nothing's always. But when you get these patterns, that's when it's a leading indicator. It's just like we talked about momentum, right? You push the button on the train, the bullet train, and it's a leading indicator because that train, after you push the button, it's not going to stop right away. We all know the future of that bullet train. It's going to continue north after you apply the button, after you apply the brakes, for another mile. So it's not a crystal ball. It's not that you have to be psychic. It's just physics. So it's the same thing in the market, but instead of the bullet train, we're measuring the money flow, right? So again, beautiful risk reward trade. All right, now let's move on and just summarize here, and then I'll turn it over to my good friend Jeff. So the summary is we're looking for the alignment of 5 energies. By the way, if you want to substitute the word money flow or the term money flow for energy, that would be perfectly fine. If that helps you, that would be accurate. Yeah, in fact, it might even be a better term. When we get the alignment of the 5 energies, these are 5 uncorrelated variables, then you've got the odds on your side. And here's my whole method. It does take an entire sentence to describe my method. So here's the entire sentence. Trend, early in a trend, that is strong momentum. At the right time, that's where we bring our cycle indicator in, our modified stochastic. At support, look for cycle lows at support, look for cycle highs at resistance. And then if that's all aligned, we go to the bigger time frame and we want to see momentum, not trend, but momentum in the direction of our trend on the higher time frame. By the way, that last one, this last one here is the most important. It actually holds veto power because you can get really good looking setups on one time frame that fail. And most of the time, when I have researched those and studied all kinds of stats on them, what I found is that the energy is in conflict. It's in direct opposition with the momentum of the next higher time frame. And that's when I added this 5th energy. And I said, oh my gosh, that's what's happening. So we want everything, the money flow, to all be unidirectional. Think of it that way. The money flow is like a stream. Money is just flowing down a stream rapidly, and we're going to just jump in that stream and go with the flow. It's just like in life. It's wise to go with the flow. Don't try to swim upstream. I mean, in the markets, if you swim upstream, what you're literally doing is taking the opposite side of professional traders. You're taking the opposite side of Goldman Sachs, Merrill Lynch, Citibank, you know, the S&P whales, whoever. You're taking the other side of their trades. Now, is that a good idea? Well, I don't think so. I'd rather just, you know, go with the flow, hook my way into the whales. And that's what we're doing. And this is how we do it. And the method's very robust and adaptable because we're just trading money flow, and all markets are auction places that basically function based on money flow. We can trade it with stocks, commodities, options, currencies, futures. You can do it for investing, swing trading, or day trading. And it's simple. It's objective. We're counting to 5 for crying out loud. Okay. I got one more slide after this one, but I just got to show you this because I'm just so excited about this. And then I'll turn it over to Jeff. So this is one of the cool things. Metastock, first of all, they have done stuff with the software that no one else has been able to do. I have gone out and tried to have other companies and charting programs customize top dog trading indicators, and they've all, well, some of them couldn't do it at all. Some charting software programs, they just can't do it. Their programming language is not robust enough to do it. So that's the first thing we ran into. And then number 2 is the skill of the programmers. This is not easy stuff to program, unfortunately. And I was very surprised by that because my trading method is just so simple. I thought, oh, this is easy. And then when the programmers went to do it, they're like, oh, having all kinds of problems. Metastock's the only one who's actually been able to put everything together that we wanted. So the Berry waves are counted for you. They're plotted on the chart automatically. Down here, it shows you what the trend is up or down. Nice. Here's your timing indicator. Okay, that's on there. You can scan for all of the setups, but not only then, and we're going to see Jeff telling us how to scan for them, but you can scan on multiple time frames, which again, even those that do have scanners can't scan on multiple time frames. Then here's something I've never seen, which I love. So let's say that you get a wave 9 reversal right there. Okay, so you just click on that. Let's say it's on real time, but we're just showing an example here because I wanted to show you the results of it afterwards too. So what's going to happen is it's going to give you a little arrow. There's your little arrow right there. And that arrow means, oh, this trade is now confirmed as a wave 9 reversal short. Then it describes the setup. And then you got all this commentary here. So this adds to not only your education, but dang, look, the entry is right there. The initial stop right there. Your target. So where to get in. You guys said you have trouble knowing where to get in. There it is. You said you have trouble knowing where to get out. There it is. You have trouble with your stops. There it is. Problem solved. And it's all right there. It's just incredible. I mean, this is a dream come true. And I worked with a programmer on all this, and it took a long time because even with Metastock programming language, which is amazing, they still had some challenges. And the good thing is they have such great people over there, such smart people, that they figured out how to do it. And I just couldn't be any happier. I'm absolutely thrilled with what they've done. It's the best. So before I turn it over to Jeff, let me just say that I do have some extra freebies for you here. And one of the freebies I have is, so first of all, if you want to contact me, you're welcome to contact me. That's my email address there, barry@topdogtrading.com. Never feel shy about contacting me. I actually love talking with traders. To me, it's fun. I love this. I'm just as passionate as my dad was about it. So to me, this is just a joy. So any questions you have or comments, whatever, feel free to contact me at any time. You will never bother me. And then today I also have a free 5-day video correspondence course, goes over some of the stuff we've talked about today. But this course is specifically about how professionals trade differently than amateurs. It's called Trade Strategies of the Pros. Get 5 5-minute videos. Wait, free 5-minute video tutorials. Yeah, there's 5-minute videos. And it's not just theory. I want to give you something really practical, my rubber band trade. This is an actual trade setup that you can start trading. Please trade it on a demo account or simulator first to prove it to yourself. I get so many people writing back thanking me for this, and I just give away that trade setup for free. Because why? My philosophy is I want you to start making money. I like to give you results in advance. And you can get it all by just going to topdogtrading.net. Notice it's .net, not .com. You can go to topdogtrading.com as well, but that's just my blog. And you're welcome to go there, but if you want to get this offer, it's at .net. All right, and I just typed both of those into the chat box, and actually topdogtrading.net is a clickable link in the chat box, and it looks like Jeff has also typed those into the question box. So you can access all of that there when this slide goes away. So I went a little over time. I feel bad about that, but I get excited. So Jeff, let me zip my mouth here and turn it back over to you, because Jeff has some extra stuff to share with you that I didn't even share with you. Some really, really, really exciting stuff that even goes beyond what I shared with you. So Jeff, thanks for having me today. And I hand the microphone over to you, my friend. Jeff, are you there, my friend?
Oh, I need to unmute
Jeff here real
myself.
quick.
Hello? Hello? Barry? I am. Hello, can everybody hear me? Can anybody hear me? Test. Oh, okay, good. Good. Sorry about that. I was muted for a second. Barry, do you have time for a couple questions? I don't know if he can hear me.
Oh, yeah, absolutely.
So Thomas asked a question. If you do a 3-for-1 verification on a 5-minute chart, what would you recommend for a 4-hour chart?
4-hour, yeah. I like the 1-to-3 ratio between charts. So now that when you're using a 4-hour chart, it would depend what market you're trading, because you got to look at the market hours. So now if you're trading something like a 24-hour market like spot Forex, then for a 4-hour chart, I'd use a 12-hour chart. But if you're using, trading stocks, which have a 6.5-hour trading day, open outcry, then you'd have to adjust that based on the hours in which it trades. I wouldn't consider pre-market and post-market trading in that situation. So you'd have to do the math on that. And the same with futures. But you can trade other ratios. So you can also trade a 1-to-4, and that's cool. And you can do 1-to-5. So, and that's built into Metastock. Now, 1-to-5 would be obviously a daily and a weekly chart. So, but what we do there is we modify the momentum indicator on the weekly chart a little bit. We shorten the lengths on it so that the indicator is more responsive. It responds quicker, I should say. So there's not as much delay. Because 1-to-5, there's a little bit too much lag, and Metastock already has those parameters pre-programmed in so that it tightens the correlation between the two ratios.
Okay. CP Pete asked a question. I don't understand it, to be honest with you, but he says, Doc, I know you measure the market with the energy, but this one you're using candlesticks for divergence. So what's the time frame for the 5-bar count? I'm not sure I understand what he's asking there. Do you?
Not really. Candlesticks, well, candlesticks and energy are not really different things in the sense of, yeah, to compare energy as opposed to candlesticks, that's just not really, you're comparing apples to bananas there. So, okay. yeah. But let me see, for divergences, so that, what's the time frame for a 5-bar count? I don't really understand that either.
Okay, me neither.
Yeah. Yeah, if you want to rephrase the question some way, I'm happy to answer, but yeah, I just really don't quite understand the question either.
How do you use support and resistance as a step 4? And I think we can kind of visually show this a little bit. I've got a chart of Walmart open,
Okay.
and one of the things that we've got on here is we automatically draw a lot of the support and resistance levels, whether those are support and resistance based on the cycle highs, which are kind of these blue lines. There's also a different view where you can actually do the Fibonacci support and resistance. So I think the idea here is if you're looking to take this trade, what you're looking to kind of get a little bit more excited about the exit, and Barry, please correct me if I'm wrong, you're going to be looking for it to go towards like a cycle low. And certainly if it kind of comes back up and breaks up above where the 7 line is, you'd be using this as a stop point. So did I kind of get that right?
Yeah, that would be an initial stop point. Now, then we would move it down. So that's a trend reversal trade. And as you can see, the trend does reverse, goes down under the 50 MA. So after the next cycle high after that, if you can move your cursor over to that one,
This one?
where B, yeah. So then
Okay.
after we create that cycle high, then I would, move my stop to above that cycle high.
Okay, perfect.
So that'd
Perfect.
be like a trailing stop. Mhm.
Uh, yes, Nafe, you can definitely. Now, Nafe asked a question that I'll read off. Can you trade futures with stocks or with Metastock? And yeah, absolutely. One of the things that's nice about Metastock is the market coverage. We get all of our data from Thomson Reuters. Something like 390,000 instruments that you can actually look at. So you can do stocks and futures and ETFs, some currencies. You can do U.S. markets. You can do Canadian markets. You can do Indian markets. All in all, the exchange coverage is about 210 exchanges globally that it follows. So yes, absolutely, that includes futures. Ofer asks, how do you find what stock to trade? I'll show you the scanning in just a second, Ofer. Um, St. Wu says, what are your thoughts on using CCI as a leading indicator?
Well, CCI can be used very well, and I have used it in the past. And I have a friend who uses it very effectively, and he's a great trader. But it goes back to what I said earlier in the presentation. There's a lot of good stuff you can use. So it's not a matter of, is this indicator good or bad? There's so many ways to groom a cat. There's so many traders who make a lot of money in using all different kinds of methodologies. But you can't use everything that's good or that can be used, or it's just information overwhelm. So you choose the ones you want to use and you stick to it. Let me just say this too, very important that you do decide on a methodology and stick to it, because gosh, I remember when I was early in my trading days, I belonged to a trading club, which was awesome. Gave me exposure to a lot of different trading methods. We'd have a different speaker come in every other Saturday and present their method. And so I basically was changing my trading method every 14 days. Oh my
How'd that
gosh.
work?
No, no bueno, no bueno. So again, it's good to get exposure to a lot of things, but then, when you're going to really settle down and make this your profession, or, make some real money at it, if it's part-time or whatever, you got to decide, okay, this is going to be my method. This one resonates with my brain cells, and just stick to it and stop looking at everything else. And it's not that other things aren't good. It's just, you don't need them. You choose, you get your little game that you play, and that's going to be it. Let everybody else play their games. But, yeah, you're just going to run around in circles chasing your tail. If you like CCI, good, but just be careful of using too many things, and learn how to trade the CCI. Yeah, there's nothing
I
magical
believe
about
that.
that, or the stochastic indicator, or MACD, or RSI, or LMNOP, or any of these indicators. None of them are magic, right? So it's learning you got to learn what they mean, first of all. It's really important.
Absolutely.
Yeah, understand your indicators. What is this equation? What is it measuring? And that's why these patterns are so important. A lot of times, they're just, frankly, most of the time, the market's in a random walk. It's like the book Random Walk Down Wall Street. And yeah, most of the time, the market's in a random walk. So one of the hallmarks of professional traders is we actually probably trade less than most of you think we do. And in fact, I think it was Van Tharp who said that good trading is boring. And I think that's what he meant by it. So yeah, we just wait, most of the time it's kind of in a random walk, kind of chaotic. There's no high probability scenarios. So learn how to establish a probability scenario, whatever means or tools you decide to use, and then only trade that. And that's tough. I mean, that was my cardinal sin in trading that I struggled with for many years. And frankly, even once in a while, it still comes back, is over trading.
I think there's a technical word for that. Analysis paralysis.
Um, yeah, analysis paralysis. Absolutely.
All
Absolutely.
right.
And there's a
Ernie,
fear of missing out in market moves, but there's also a fear of missing out in market tools, right? And
mhm.
thinking that a tool is going to be your answer. None of these tools are your answer. It's the combination of putting them together in a strategic way that establishes a probability scenario. It's that combination that's the answer, not any one indicator.
Ernie, I want to show you this on the chart because it reads directly into the question you're asking, which is how do you read divergent settings on the chart? And one of the things that William did, William is the programmer, and he's very talented in Metastock. But you'll notice these little red lines that are pointed on the stochastics. The question is how do I find the divergent settings? Well, this actually automatically does that for you. So if you see right here, there's a little bit of a red line that's drawn between this peak and peak. If you look at the price during that corresponding, the price was rising while the stochastic was actually falling. If you look here at this trough, this trough to this trough, the price was higher, yet the price was actually dropping during that time frame. So it actually automatically labels those on the chart for you in these little red markers when those divergences happen. So that's how you find them. You just look at the chart.
Jeff,
So
let me make one comment about that too, because yeah, you're absolutely right. And yeah, William was amazing. So you'll notice that, yeah, there's some red lines, divergences down at the bottom there too. But you wouldn't want to trade those. So this is an example of what I was saying, how you don't trade anything in isolation. The reason we would want to take the one that Jeff pointed out at the top, the wave 7, is because where that mini divergence occurs in the trend, it occurs in a wave 7, late in the trend. 5 waves are average, therefore we don't want to trade an average, right? That's a balanced position. We want to trade an extreme statistical position on the bell curve. So when you get that mini divergence at that place in an extended trend, then we trade it. Now the market's moving down. The trend is no longer our friend. So at this point, I'm not going to be buying any cycle lows. I don't care if there's a mini divergence or not. I'm just not going to buy them. They're there, but it's against the trend. And also, look, momentum has been going down. So
yeah,
now that automatically disqualifies all those mini divergences at lows.
um, and I want to point out while we're talking about this first one, right at this 7 high, you'll notice if I move the arrow, there's this triangle. There's a bit of an arrow on the chart that indicates that there's actually a signal that is formed right up here with Walmart. And so if I highlight this, it's actually going to tell us that it's a wave 7 reversal short. So with the wave 7 reversal short, basically what it's looking for is you're saying, okay, we've been in this trend for 7 waves now. We're anticipating that it's going to reverse. Okay, and so it's actually notifying you that on the chart the conditions have been met. You've got that divergence, and what happened? Walmart fell from there. And if you notice right here, I'm going to actually kind of bring this out into focus for you. As soon as that appeared on the chart and you confirmed it with the other indicators, it's going to give you an initial entry point, an initial stop loss. It's going to tell you what your targets look like. And you can even kind of drill into that. If I kind of click on this hyperlink here, it's actually going to give you kind of like, let's say, a very, very detailed definition of what the setup is, what the entry is, what your stops are, targets, strategies for increasing the probability of the success, and any additional commentary that Barry wanted to provide as part of that setup. So it goes into a lot of detail so that when you get this on a chart, it's immediately going to tell you exactly what you need to know to properly implement this as a trade. In any case, the other question that we had is how do you find these signals? And I think what I'm going to do is I'm actually going to go into this PowerPoint and kind of give you a list real quick of is my PowerPoint not open yet, or is it not expanded? Okay, here it is. It kind of give you an idea of what you can scan for. So let's go ahead and kind of take a look. I think I have them all on one screen. Okay. So if maybe you're looking for a stock that's in a brand new trend, so in other words, we're anticipating it's going to continue in that trend, you have scans that you can run to kind of find opportunities like the first retrace, the first pullback after it's gone into a long trend, or the first pullback after it's gone into a short trend, or the second. If you're looking for some of those that are more reversal patterns, like that 7-wave reversal that we just showed you on the chart is one you could scan for. There's also a 9-wave reversal that you can look for. There's also a couple of momentum scans, like the first high after the dad turns down, the first low after the dad turns up long, and then some reversion to the mean scan. So if I go back into Metastock, it's actually really easy to kind of run a scan for it. Right here, for those of you that are not familiar with Metastock, our scanner is literally called an Explorer. And you'll notice that there's these top dog explorations that are in here. If you wanted to find something that was a dad trade or maybe a rubber band trade, or you just kind of select using your, put a check mark in this and it'll run the scan. Just going to run 3 of them so you can kind of get an idea how that works. And I'm going to run it against a list that I filtered based on the volume of the stock and the price of the stock. So in other words, I've already gone into Metastock and I said I want to trade stocks that are, I believe, above $5 and have a minimum average volume of, I believe, if I remember right, 300,000 shares a day. Okay, so I've saved that as a list that I can just scan every day. Okay, and so I'm just going to go ahead and, of course, I'm going to scan for the current day. We'll go ahead and I'm going to change this over real quick. We'll just go ahead and start an exploration. And what's going to happen is you'll notice that it's just running through this scan for me. I've got 3 scans that it's going to run against. It's kind of giving me an idea of the status here. It's almost done with this first exploration. Then it's going to move on to the second and third exploration. So the top dog rubber band trades is done. If I want to look at just the signals that had along today, instead of looking at the 3,000 or 4,000 stocks that were in there, we rejected about 2,400 of them. Okay, so if I'm looking for a rubber band trade today, and let's say I particularly want to go long, maybe I'm bullish on the market or whatever your logic is for that, instead of looking at the full 2,400 that are in that stock, the list of stocks that you'd be willing to trade, you'd be looking at maybe 1, 2, 3, maybe 10 or 12, and they're all right here. And from here, we can open up the chart, we can apply the commentary, we can look at those trades. And it's all done for you. If I wanted to look at wave 9 reversals, there actually weren't any in the market today. It rejected every single one of them. And that just means, hey, if that's the type of setup that you want to follow, well, your workday's over at that point, right? But the idea is to kind of save you time. The scanning functionality in Metastock is so nice in terms of putting that together and stuff like that. Albert asks, what's a dad trade? I don't think we'd have time to get into that today, but we do cover it in the manual and that kind of as well. So Kathy says, I'd like the details on this. And CP says, I like how fast those scans are running. Yeah, I do too. It seems like it got a lot faster with the update we just pushed out as well. So in any case, these are the patterns that are going to be marked on your chart. These are also the let's say the things that you can scan for. So there's a new trend scan, a long trend, a momentum, and a reversion to the mean scan. All of those are things that you can run in this package and are put together for you. There are a whole bunch of indicators, like indicators that automatically draw Fibonacci support and resistance, swing levels, pivots, momentum. A lot of times what you're going to do is you're going to primarily apply the template and it's going to put the indicators all on the chart for you. So in any case, the product itself is available. This is a one-time cost. So if you pay for it as a one-time cost, basically you own it forever. You don't have to pay again for that. If you do need to have a subscription to Metastock as part of it. But for basically $499, $399 here at the webinar, so we'll give you a break of about $100 on it. We also back this, by the way, with a money-back guarantee. So if you buy this, you like it, you keep it. That's the goal, right? But we like to give you a bit of a risk-reward offer on this. If it's something that's not helpful for your trading, literally your real risk is your time. In terms of a dollar amount, we'll give you a refund if it doesn't work for you or if you don't like it. The thing is you probably won't take one. People really, really like this product. So just give it a fair shot. To take advantage of this, you can give us a call at 800-882-3040, or you can visit metastock.com/topdog-A. If you don't have Metastock already, I'll tell you just a little bit about Metastock. I noticed there's another question for me in there. I'll get to it in just a second. Metastock's a software program we've been developing it since the 1980s. It's consistently been rated the #1 software program in its price category by Stocks and Commodities readers every single year for the last 24 years. I've been here 21 years, but every single year it's rated #1. So thank you for everybody that keeps voting for it, by the way. But it's a great product. You should try it out. It's going to work. The main reasons to get Metastock are, in my opinion, the ability to kind of get that detailed commentary that you see on the screen there, the ability to scan for stocks and find stocks that match your criteria, the ability, and we didn't even talk about this today, but Metastock has one of the most advanced system testers on the market. It has the ability to go in and test trading ideas to see how well they work on and what stocks they work on and what your drawdowns look like. We have a forecaster that uses a lot of pretty heavy statistics to kind of give you an idea of where stocks are going to go. So it's a fairly robust tool. It's also not a tool. It's a tool we've been working on for 30 years. So if you've bought a product in the past and very quickly realized you grew out of it, it's not going to happen with Metastock. It's really a product that grows with you as a trader and not one that you have to leave behind in the future. So if you go up to the webpage, I'm just going to show you how that looks. So metastock.com/topdog-A is where this is going to go. And I thought I had that open. Oh, here it is. Okay. I just had to find it. Basically, you can watch a little bit of a video I put together. It's about 20 minutes long, kind of goes through the toolkit and a little bit more thing. But down here, you'll be able to order this. Again, you'll see right here, 30-day money-back guarantee. $3.99 one time. And if you need a trial to Metastock, either you have an option of a end of day version, which is only $59 a month. Your first month's free. Or you can do our real-time subscription, which actually includes data from Metastock Zenith. And that starts at about $199 to about $250 for Metastock with real-time data. Okay. And then you just order basically. So very, very simple order process. Alexander Marshall, thanks for the question. Asked a question, is there a way to go back several days into the scan, like 9 reversals ago, that happened a week ago? Yeah, absolutely. Let me show you. That's actually pretty easy to do. When you're setting up your scan, one of the things that you'll notice, because I'm going to point it out, is I'm using the current day and time. If you wanted to go back about a week or 2 weeks ago or whatever you wanted to go, you can do that. Just take out the use current, put in whatever date, and if you're doing intraday, whatever hour you want to scan for, and then it can give you a list. And I like the idea. I like what you're thinking about, Alexander. Let's go back and look at all the wave 9s and then see what happened afterwards. You absolutely can do that. Okay. CP Peel asks if we have a brokerage account. Well, I have one. It's with TD Ameritrade, actually. We're not brokerages. So the nice thing about getting Metastock, and the thing that we're really focused on, CP, and I appreciate the question, is not being a brokerage. We really just wanted to develop software here. A lot of us use different brokerages and that kind of stuff. Our core focus for now, and I don't see this changing, is going to be to develop the best tools that are available in the marketplace. So you don't have to fund an account with $10,000 and pay a platform fee or whatever kind of the requirements are out there. It's $59 a month. And as long as it's helpful for you, I guarantee it's worth $59 a month. So hopefully that helps you with it, CP, helps you answer the question. So again, to take advantage of that, you can come up to metastock.com/topdog-A. Or you can give us a call if you have some more questions. Maybe you want one of our sales guys to answer specific questions. Give us a call. We have a good group of guys here that can answer any questions you've got. They can help you get set up. 800-882-3040. All right. Very good. Barry, I want to thank you for your time. Thanks for coming, guys. I really appreciate it. We had great attendance today. If there's anything that we can do, please let us know. And I will see you at the next event.